All right, today we're jumping into a really core concept for checking out any company. Its market position. We're going to break down how you can analyze a company's competitive power so you can look past just the stock price and really get a handle on what makes it tick.
So, you're looking at a company, right? How do you actually figure out where it stands in the grand scheme of things? Is it a giant calling the shots? A hungry underdog trying to steal the crown? Or maybe a hidden champion flying under the radar? Well, by the end of this, you'll know exactly how to tell.
Okay, so let's get right into it. At its heart, market positioning is really all about context. It's not just about how big a company is. It's about where it fits in the whole competitive puzzle of its industry. Think of it like a company's strategic address on the map.
Now, to really understand this map, we first need to know who the main players are. You'll find that in just about any industry, there are three main archetypes that pretty much define the entire landscape.
First up, you've got the market leader. This is the heavyweight champion, the one with the biggest slice of the pie. A perfect example is Google in the world of search engines. I mean, they're so dominant that they often get to set the trends and the standards for everybody else.
Next up, we have the challenger. This is that ambitious number 2 or maybe number 3 who's always looking for a way to take on the leader. Their whole strategy has to be aggressive and innovative. The classic example here, you got it, Pepsi's decades-long battle with Coca-Cola. And finally, we have the niche player. These guys are the specialists. They don't even try to compete with everyone. Instead, they find a very specific, well-defined corner of the market and they just own it. Think about a company like Ferrari. They aren't trying to sell millions of cars like Toyota. They're laser-focused on high-performance, luxury sports cars, and boy, do they do it well.
So, let's put it all together and see how they stack up. As you can see, the leader is dominant, usually offering steadier, but, slower growth. The challenger is aggressive, with huge growth potential, but that also comes with higher risk. And the niche player is specialized, often with fantastic profit margins, but a smaller market to conquer. Each one plays a totally different game.
Okay, this is all great for understanding business strategy, but why does it matter for your wallet? Because as we're about to see, a company's position has a direct, and I mean massive, impact on its financials and its value as an investment. Just take a look at this table. Market leaders are typically lower risk, and because they're so stable, they often command these premium valuations. Niche players can be super profitable, but they're valued a bit differently. But look at that challenger column. That is often where investors go hunting for that explosive growth, even though it comes with a bit more of a bumpy ride.
And let's put a real number on that potential. A successful challenger, one that's really executing and taking market share, can see annual growth rates of 15, 20, even over 30%. This is where you find those game-changing, disruptive stories that can completely reshape an industry.
Theory is one thing, but let's apply this whole framework to a company we all know and see this analysis in action. Let's talk about Netflix.
A company's position is never set in stone. It's always evolving. Just look at Netflix's journey. Back in 2015, they were the clear challenger taking on the giant that was cable TV. Fast forward to 2020, and they'd basically won that fight, becoming the undisputed market leader in streaming. But now, the game has changed again, and they're in a whole new phase, defending that top spot from a wave of powerful challengers like Disney Plus and Amazon Prime.
So here's the crucial takeaway. As Netflix shifted from being the challenger to the leader, the entire investment case for the company changed with it. The expectations for its growth, its ability to raise prices, and the risks it faces today are completely different than they were just a few years ago.
So, how can you start doing this analysis for yourself? Well, here's a quick checklist of what the pros look at. You dig into its market share, compare its revenue growth to the rest of the industry, see if it has pricing power, and really size up the strength of its brand and its competitive advantages. These are the clues that tell you which role a company is playing.
And there you have it, a clear framework to understand market positioning. You've got the tools now. So my question for you is, which company are you going to analyze first? In fact, let me know in the comments. Drop a comment below and tell me which stock or sector you'd like to see me break down next. I promise you, I read all of them. And hey, here on the channel, we don't just talk about stocks. We also dig into every fundamental ratio and concept, just like this one, so that you can learn to analyze companies for yourself. So for more deep dives and market insights, make sure you subscribe and hit that bell icon so you don't miss a thing. Thanks so much for watching, and I'll see you in the next one.
Disclaimer. Educational content only. Not SEBI registered. This is not a buy/sell recommendation. Invest at your own risk.